just got a brand new computer and getting everything swapped over from the old computer to the new computer, so hopefully it'll be done relatively soon. Period. Oh. Okay. Okay, so
Hey, what's up, y'all? It's your girl from Palmer. Medical marijuana.
come on. Hold tight. I'm just getting ready to get started. Just getting started, getting everything in order. Live, 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 live. Let's get to oh, everything going. I think I do. I think. Sit tight, sit tight. All right. Alrighty. Where are we? Good evening, everyone. My name is James. This is Dividend Stock Talk. Give me a second. Let me address this situation over here. Come on. There we go. There we go. There we go. All right. Let's see who's here tonight. Who's in the house? Who do we got? We got Jesse, Shaw the Turtle, Donald Shaw, Intro 75. Who do we have over here? Double E, Aaron Kelby, Farmer Dan, the Bee Guy. That Bee Guy. Okay. Lily, Tina Marie, good evening. Pat, New Jersey, what's going on? Rick James, good evening. Shaw the Turtle, Olivia Willow, Imran, Kenny, okay, Jerome. All right, good evening, everyone. Who do we have down here? Mr. Steve, good evening. Great day today. I have one stock to look at, Abelmal. Ooh, maybe a 5% premium. Nice going there, Mr. Steve. Mohammed, how are you today? Jerome Christopher Shermack, RLT 1952. Not quite sure what the RLT is, but okay. George, Jannard, Nike. Okay, well, let's take a look at Abelmal first, then we'll take a look at Nike. All right, so before we get started, good evening. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I'm looking for a simple, safe, predictable 1% per week, using nothing but pre-qualified dividend stocks, and those are companies that have been consistently profitable for at least 2 decades. So, simple rules. Number one, please make sure anything you want me to look at, you understand it, you know it, and you are well versed in all the aspects of it. That means don't show me something and have me do the work for you. Okay, number two, weekly options only. If you're thinking of investing, you should know what company you're investing in, what they have available. They either have weekly options or they do not. And you should know that before you even think of buying something. You should always know, what is the 52-week high? What is the 52-week low? Do they have options? Are they weekly options? What are their earnings? Are they earning more this year than they did last year? Did they make more money last year than they did the year before? This is your money we're talking about. Now, we're the only species on the planet that's got to pay to live here. So your money has to come from somewhere. And to the degree in which you want to live comfortably, you want to live on the beach, you want to live on the water, you want to live in the mountain, you want to live on a big yacht, you need a certain amount of money in order to be able to sustain that lifestyle. So, simple, safe, predictable, consistent 1% per week. Yes, I realize that is over a 50% return. Now, it's not free. You actually have to do something. You actually have to take the risk, put your money on the line. Am I right? Am I wrong? Is this a good company? Is this where I want to park my money for a while? The rules are simple. Rule 1, never buy something you don't know, you don't understand, or you do not want to hold on to for the rest of your life. If you can't see yourself buying it and holding on to it for 10, 15, 20 years, you shouldn't be buying it in the first place. Rule number 2, never sell at a loss. It defeats the purpose of the game. And yes, it is the game. Everything goes up, everything goes down. How, where, what, and when you jump in, that's up to you. Because stocks go up, stocks go down, and then they do it all over again. They go up, they go down, they go up, they go down. That's it. They don't come to your house and take you out for dinner. They don't wash the dishes. They don't take the dog out for a walk. They go up, they go down. That's it. It's your job to figure out where the best place put your money. Okay? What companies do you believe in? Oh, basically, you got 2 choices, and only 2. If you think you got more than 2, someone's lying to you. Number 1, you can learn to do it yourself. Take control, take accountability, take responsibility. It's your money. 2, you can give up accountability and just give it to someone else and they'll do it for you. That's it. Do it yourself or have someone do it for you. But don't mistake that your money's got to go somewhere. You put it in the bank, they're going to put it somewhere. Nobody in the investing world or the money world of whatever you want to call it just leaves money to collect dust. They put it to work, and that's what we're going to do here. We're going to put it to work with good companies that are consistently profitable. That's what we're looking for. Okay, Abel Mal, hello again, Mohammed. You got crashed. I'm not 100% sure what you're saying about that, but okay. Okay, first on the list tonight is going to be, which one was it? I'm not that old, am I? I know we have Nike on the list. CVX is on the list. STLA is on the list. We had one that was on the list before that. Damn it, I forgot. All right. That being said, Albemarle, ALB. First on the list today. Let's check it out. ALB. Anytime I look at anything, here we go. First thing I want to look at is the 1-year chart. And then I'm looking for 5 specific things on every chart I look at. Whether it's a 1-year chart, 90-day chart, 30-day chart, 1-week chart, 3-hour chart, it's always the same. What I'm looking for is the high, the low, where was it, where is it, and what is the momentum? Sideways, up, and then back down again. But look what's happening right here. Topped out last week. Now we're changing direction. So yeah, that part works. Let's go to the next one. After I take a look at the 1-year chart and everything looks happy, I want to find out, what do the numbers look like? Now, rule number 5 is make sure all the numbers work. And we'll get into the rules in a little bit. But just sit tight. Okay, we're going to get to the rules in a bit. But rule 5 is make sure all the numbers work. Okay? The numbers, basically, they're very simple. What's it at right now? 175.43. 175.43. 175.43. 175.43. It's up there 4 times at the current price. 175.43. Okay, so if I'm going to buy this tomorrow morning at 175.43, what am I going to turn around and sell it for? Well, more than likely, I'll probably end up doing the 175s because they're selling for $6 a share. Well, I like $6 a share because remember what I said earlier? I'm looking for 1%. And $6 a share is more than 1% on a $195 stock. So let's go through the whole thing. You ready? We've seen the 1-year chart. We've seen the numbers. Now we want to squish this down a little bit and take a look at the last 90 days. The last 90 days gives me a good idea of patterns that may occur. Okay, buyers and sellers. We buy, sell. We buy, we sell. It's not that difficult to understand. Here we go. There's 5 things. High, low. Where was it? Where is it? Look at this. Up, down, up. You can really see it there now. Okay, 30-day high. She drops down. Call it profit taking, retracement, correction, whatever you want to call it. I like to call it profit taking because the bottom right here, 140, she jumps up to almost 200. Now she's back down to 160. Yeah. So from 140 to 200, yeah, it's $60. That's a big jump for a $140 stock. Okay, it's more than 20%. So that being said, stock goes up, people jump out and take profits. Because here's the thing, a funny thing about profits. It's not a profit until you take it. And nobody ever went broke taking profits. It's kind of weird if you think about it. You know, the profit's sitting there on the table. You take it or you don't take it. It's your choice. No matter what you do, it's always going to be your choice. You have to do what is right for you. I'm just here showing you what I do. If you agree with it, great. If you don't agree with it, hey, that's fine too. You know? All right, so I like the last 30 days. Check it out. 30 days ago, we shoot up, we drop down, now it's going back up. 1, 2, 3, 4. 4 days going up, and we have all that space right there to challenge the 30-day high way up here. Okay? So let's do one. Now I'm going to show you how I do it. Going to give you the numbers. If you didn't know, if you are new here, what you're hearing is being recorded. Okay, so if you want to go back and listen to it again, just go to YouTube. And this right here, the screen with all these numbers that you probably cannot see on your phone or your iPad. Okay, big screen TV. Go in the other room, pull it up on YouTube. This right here, this screen is live. So you can see everything that way. Okay, that being said, let's do a sample trade on this company right here, Abelmal. We're at 173. All right, so let's do the 172.50. 175, but here's a little tidbit or a little trick just in case you didn't know it. The closing price today, 175.43. That was the last traded price as of 4 o'clock this afternoon when the market closed this afternoon. Now they have what's called after hours trading, and I don't know anybody here that is actually qualified or has clearance or what do you call it, the ability to trade after hours. You can probably do it if you wanted to, but here's the thing. Right now, it's at 172.83. So I'm going to do 170 because it's closest strike price. Now remember, whatever you hear me say, whatever you may hear or watch me do, I'm always looking for the same thing. A simple, safe, predictable, consistent 1% per week. What do you think about weekly pay ETFs, especially Round Hill Gold weekly pay ETF? Okay, Rust Belt, sit tight for a second. I'll take a look at that and I'll give you my opinion. But you got to remember where my opinion is coming from. I love the idea of weekly cash flow. But is it going to give me enough money to pay my bills? Now, right now, I'm averaging 1.4% every single week. Now I'm saying I'm averaging, which means some weeks I make more than 1% and some weeks I make less than 1%. But for the majority of the year, it's average at 1.4% every single week. Works for me. So why should I try to fix it? All right, let's do this trade right here. And we're going to do just one trade. This way you'll be able to hear it, see it, and then we're going to do a little bit of crazy math to figure out what our rate of return is. Now remember, we're investing for weekly cash flow, not monthly, not quarterly, not annually. I want to get a 1% or more every single week. Let's check this out. You ready? Buy one covered call, Abelmal. 13 February, which is this coming Friday, the 172.50 call option. That means I'm going to sell it to somebody for just a little bit less than I paid for it. But I'm still walking away with $744 per contract, and each contract is going to cost me $16,506. Okay, so I'm going to buy 100 shares. It's going to cost me $16,000, and then this. I don't know what it's going to be, but one contract is $741 for one contract. So if I get 7 contracts, what is that, like $5,000? Depending on what your budget looks like. Now I'm 62, I'm retired, so I have 50 years of money behind me. Well, you have the same opportunity. When you turn 62 and you hang up your working clothes and say, you know what, I'm done. However much money you made in your working life, that's the amount of money you got to work with. You got to figure out where the best place to put it for you and your family. Okay, so I've been doing this for a while, so I'm pretty much okay with what I'm doing, but you really shouldn't listen to me. Okay, I mean, you can listen to some of the ideas I have, write them down, and then talk to your professional, your lawyer, your accountant, your CPA, whatever. Whoever you go to for sound advice. I'm just giving you ideas. And this is just entertainment and observation. It's not meant to be anything other than entertaining and observations. That's it. You give me a stock, I take a look at it, and I give you my opinion. And that's all it is. Okay? I'm not a professional anything. Okay? I have the only thing I have behind my name is SR. That just means I had a son named after me. That's all that means, is I have a son, James Sr., James Jr. That's the only thing after my name, okay? I'm not an accountant. I'm not a bookkeeper. I'm not a financial advisor. I'm not anything other than the guy down the street. That's it. I'm just the guy down the street who knows a little bit about investing. That's it. So let's check out the numbers. In order to check out the numbers, we need the calculator. To find the return is relatively simple to find. First thing we do is we profit 744. Okay, do you remember the initial amount of money for this one particular trade? Cost of trade, including commissions and fees, 16,506. Okay, well, let's figure this out. Profit 744. Divide it by the investment. That's going to give us the rate of return for this week. This week. That's it, just this week. 16,506 comes to a total of, are you ready for this? Seriously, are you ready for this? 4.5% for 1 week. Okay, let's go back to elementary school. 1% per week comes to over 50% per year. 2% per week comes to over 100% per year. 3%, 150. 4%, 200. Think about it. 4.5% every single week. That's over 225% at the end of the year. Now, yes, it's not free. You actually have to do something. Okay? Now, I understand it's a burden. Terribly sorry. Okay? The burden, here it is. You got to spend 5 or 10 minutes every day. It's kind of like having a dog or a cat. You got to walk it, you got to feed it, you got to clean up after it. It's kind of like having a tomato plant or a rose bush. You got to weed it, you got to take care of it, you got to water it, you got to tend to it. You should be doing the same with your money. It's strange. Americans spend more time and effort planning a weekend barbecue than they plan their finances. It's kind of weird. It's kind of sad too. Okay, think about it. You probably spend more time and energy planning a weekend getaway than you do on your personal finances, which, need I remind you, are going to take care of you for the rest of your life once you retire. Whatever you accumulate along the way to get to retirement is going to last you for the rest of your life. So how are you going to do it? So 4.5, I'm going to save this one. Abelmal. All right, so 4.5, here we go. Where am I going to fit it? How about we do this? All right, just getting this stuff out of the way so we have more space for today. All right. You know what might be easier? Here's something that might be easier. Watch this. You're going to love this. There we go. One covered call Abelmal, ALB, 13 February. That's this coming Friday. The 172.50. Okay. Well, 744 is the profit. 16,000 is the investment. And yes, it is a 4.5% return for 1 week. That's just 1 week, if it makes sense. All right, we're going to go 5.4. Wait a minute. Let's try that one more time. 4.5. That makes more sense, right? 4.5. Ooh, TikTok, sit tight for 1 second, because apparently you need some help with that. All right, hold on. Josh, we'll take a look at that in a minute. Sit tight. All right. What do we have over here? Who do we have? Juan, good evening, Juan. In Spanish, please. ¿Qué pasa, amigo? ¿Cómo está usted, señorito? Señor. Can I get a shout out? Patty, how are you, Patty? Liam. Hi, Liam. All right, what do we have over here? Huh. Okay. All right, that being said, what's next? All right, let's get rid of this. Let's get rid of that. Get rid of this. Now, question really needs some addressing, okay? All right, before I do that, I would like to get to each question. Sit tight. Please, I got 9. Yes, 9 live streams. So I'm live streaming on 9 different channels, which means I get 1, 2, 3, 4, 5, 6, 7. 7 screens in front of me. So cut me some slack when it comes time to answering questions. I will get to every single question before the night's over. All right. What do we have? Okay, Jake wants to take a look at STLA. STLA. Well, Stellantis. Okay. Interesting. Ooh, check that out, Jake. You ready? Watch this. The high of the year, the low of the year. Where was it a year ago? Where is it now? Look at the motion. Up, down, sideways, big drop. Now she's bouncing off that big drop. I love big drops like this because they have a tendency to fill up. So ask yourself the question, do I know who Stellantis is? Is this a company that I want to invest in? Before we go any further, let's go take a look at a financial website and see, does Stellantis have consistent profits? Okay, because it's not going to tell us here. We have to go to a finance website and actually plug in and see, all right, does this company have consistent profits? STLA. Okay. Responding. There you go. Yahoo Finance. That's what I use. It's free to use. Historical data. It's right there. You finger we look at it. So historical data. Well, that's lovely, isn't it? Cook, how are you? Uh-oh. We're going to have to wait on that one because apparently just rebooted. So not going to worry about that one. What stock is that? Stellantis. Yeah, I know. I don't know what it is either. Okay, Jake. So let's zoom in a little bit closer, specifically this area right here, because this is the last 30 days. Well, the last 30 days gives us an idea, where do we think it's going next? All right, well, let's find out. Here it is, the last 30 days. Now, same thing, same 5 things. The high, the low, where was it? Where is it? Look at this. Down, sideways, big drop. Now she's going back up again. Now, we bottomed out on Friday. Monday was higher. Tuesday was higher. Wednesday was higher. Just 3 days. 3 days up from the 30-day bottom. And you got this big, huge gap. Now, pretend like you don't know what it is. Well, it's when a stock drops and there's nothing there. Okay? There's nothing below 950. There's no 940, no 930, no 9, no 850. It just dropped from 950 all the way down to 7. So it bottomed out right there. That's the bottom. Now she's going back up again because that's what stocks do. They go up until they're done. And then they go down until they're done. So apparently this thing was done 4 days ago. And the last 3 days is up, up, up. Okay, great. So let's do Stellantis. Let's see what it looks like. Currently at 762. So I'm going to look at the 750s. Hold on. I'm not going to do this one. Who came up with Stellantis? There we go. Jake, terribly sorry. I get all worked up and I didn't take a look at this. Nobody's fault but my own. Are you ready? The current price, 762. Great. I'd do the 750s. Here's a 750 right there. If the stock drops, and they all do, okay, don't think for a minute that you're going to buy something and there's no chance it's going to drop. It's a 50-50 shot. Seriously, you wake up in the morning, 50% chance it's going to drop, 50% chance it's going to go up, one or the other. Very rarely do they say the exact same, but it does happen. So anyway, as I was saying, I don't do stocks that have a bunch of zeros because 7.5 is paying 15 cents. That's an awesome number, okay? But if the stock goes down, I'm getting 0, 0, 0, 0. So I got to add this to that list of companies that I just don't do because the premiums are horrible. Okay, 0, 0, 0, 0. Okay, even though I love this right here, and yeah, it is going to go up because that's what they do. But I don't buy stocks that have 0 premiums because I'm looking for 1%. Market makers offering nothing. So no. Notice Stellantis. Sorry. What do we have next? Okay, that was Jake. Sorry about that, Jake. Shorten, Tenacious, good evening. MP Trader, what's going on? Ahmed, what's going on? Jared, Rust Belt. Okay, Rust Belt wants to take a look at GLDY. It's one of those gold ETFs that pays on a weekly basis. Now, don't get me wrong. I love the idea. I do. I'm looking for weekly cash flow. And there's an ETF that pays weekly. Let's take a look. GLDY. Okay. GM. Take a look and see what the thing is. So I'm going to paying one. Okay. Now let's keep in it that the price of the stock is $16.89. Okay, $16.89 is the price of the stock. So last week it paid 9 cents. Well, let's do the math because the math never changes. 0.095. That's the dividend for last week for GLDY. So let's see what kind of rate of return that is. Divided by the purchase price, 16.86. 16.86, and that comes to a grand total of a half cent. Think about it. That's it. A 0.5%. Now, a 0.5% is not bad at all if you think about it, because a 0.5% every week is still 26% at the end of the year. But that felt, now 0.5% doesn't work for me. Sorry. Okay, I need at least 1%. That works for me. All right. Next. So GLDY is not there. And I believe GLDY is a monthly options. Let's find out. GLDY. Defiance Gold Enhanced Options Income ETF. There's no options at all. So hell no. Okay, you cannot get weekly income. Well, actually, you can because it's a weekly ETF. It had been paying a 0.5%. That's pretty damn good if you think about it. All right, that being said, that might give me a little bit of run for my money. So I'm looking for 1% a week. Give it to someone else, they're giving you a 0.5%. Now, is that consistent? 0.5% every single week? I don't know. Let's find out. First time here. So do you offer private trading services? Of course I do. I see mirror video. Yep, Money Mass. Good evening. Let's look at Schwab. All right. Hold tight. What else do we have here? Oh, okay. So Mohammed said stock you got crashed. Okay, Unity software stock were looked at yesterday. Okay, let's take a look at it. It did. Check that out. Holy cow. All right, let's take a gander at this. Here we go. Here's a 30-day high, 44. It dropped down to 24. Now, yesterday, it was a good pick. Well, what happened? It dropped. Why did it drop? And did you buy it? Well, I got 5 simple rules. Rule 1 is never buy something you do not want to hold on to long term. Okay, did you remember that part? Rule 1. If you don't understand it, you don't want to hold on to it long term, don't buy it. That's rule 1. And I never go to rule 2, 3, or 4 until I go past rule 1. Never buy something you don't want to hold on to long term. So if you bought it, well, maybe you want to hold on to it. Now, it did drop. I admit it. Now, I have no control over that whatsoever because yesterday, okay, this is what it looked like yesterday. 30-day high, it dropped. Now 3 days to the upside. That looks perfect. Now, when you wake up in the morning and you decide to jump in, you got a 50-50 shot. It's like flipping a coin. It's either going to go up or it's going to go down. Well, what happened to Unity? It went down today. Okay. Well, I'm not panicking, but where did you jump in? If you jumped in first thing in the morning, okay, listen closely. If you jumped in first thing in the morning, the stock opened up at 21.41. Okay? 21.41. That's what it opened up at this morning. And if you bought it this morning intending to do a covered call, first thing in the morning, 21.41, the 21.50 is going for 72 cents. If you didn't know any better, 72 cents on a $21 stock is over 3%. So you're getting a 3% return on your money for 1 week on a company that apparently you wanted to buy in the first place. Because if you didn't want to buy it, you wouldn't have bought it. See what I'm saying? Never buy something that you do not understand. If you took a look at Unity, if you took a look at the numbers, if you took a look at the financials, if you took a look at everything you need to look at in order to make a decision, and you still bought it, well, it opened up at 21.48. The 21.50s are paying 3%. Okay? Now, I love gap downs. It gapped down today. And it was a kind of sizable drop, too. Okay. Gap downs have a tendency to fill. So what does that mean? That means this baby's going to go up. Because they always do. Anytime there's a big drop, especially a big drop with a lot of volume behind it. See that? A lot more volume than normal. So yeah, it is going to bounce. Now, but do you like the company? And do you want to hold on to it? That's a question you should be asking yourself. Okay? So, let's keep on going. That being said, Unity at 21.50. Let's take a look at it. 21.50 for Unity. 1 contract. Let's take a gander. You ready? Here it is. Buy 1 covered call, Unity, 13th February, which is this coming Friday, the 21.50 call option. Okay, which would mean I would buy it at the current price, which is 21.12, and I would sell it at 21.50. I would bring in $113, and it's only going to cost me $2,000. Now, this is only if you like this company. So let's take a look at that rate of return. And for that, we need the calculator. Clear that. Profit, 113. Okay, follow along. Okay, 113 is the profit. Okay, the investment, $2,037. Okay, divide 2,037. That comes to a grand total of 5.5%. for 1 week. If and only if you like Unity. Think about it. It's not a profit or loss until you agree to take it. So if you bought Unity yesterday and then this morning it dropped, well, I don't know what to tell you. But here's the thing. Never buy anything you do not want to hold on to long term or you do not understand. So 5.5, we'll save that one. Unity software. All right, let's take a gander, see what it looks like up on the big board. Okay, want to play that game. There it is. And there she is. One covered call, Unity. 13 February, which is this coming Friday, 3 days away. The 2150 call option. 113 is the profit. 2037 is the investment. Think of it this way. Think of creating or buying a weekly cash producing asset. Because it's an asset. Anything you buy with a hope to sell at a later date for a profit is considered as an asset. And if this asset is giving me a return on a weekly basis, well, how much is it giving me? And how much time and effort do I have to put into it? Okay, so hypothetically, I buy it first thing in the morning. Okay, so the next day, what am I looking at? What did I buy it for? What did I sell against it? Where is it now? Where does it look like it's going? And what should I do next? It's an easy strategy. It was created for a 9-year-old. Okay, so I'm assuming everybody here is over the age of 9 because I do have adult parameters set on all the videos. So hypothetically speaking, no one under the age of 18 is supposed to be in here. So we're all adults. Does it make sense or does it not make sense? Now, TikTok says, does it bother you if the stock declines in value? No, I'm not worried about the stock price. The stock price is more or less the public's perception of the value of the company. It doesn't really represent the actual company itself. Come on. There we go. And what did we say it was? How much was it? 5.5. That's a nice one. 5.5. Well, that's lovely. Next. All right, what other questions do we have? All right, Rust Belt, we looked at GLDY. Table tennis Bud, how are you today? RKAJ, Niculator back again. I see. How you doing? Suzette, good evening. Lucas, thank you for that, Lucas. Ricky Q, Josh, how do you feel about SPY puts for March 31st? I don't do SPY. Okay, Josh, here's the reason I don't do SPY. It's not consistently profitable. Let me quickly bring it up for you, and you can tell me. Now, all the for SPY, Josh. Okay, why do I dividend payments? Because dividend or not. And yeah, I understand SPY is not a company, it is in which you can buy shares, somebody controls it, and it does pay dividends. So yeah, it's kind of like a company. Here we go. Are you ready, Josh? All the way back to 2006, because 2006 is 20 years ago. Now, I'm going to quickly go over the numbers. Tell me if this sounds good. Okay? Anybody can object whatsoever. Here we go. 2006, March 17th, 2006. The very first dividend of 2006 was 51.9. Okay, I'm just going to go higher, lower, higher, lower. That way I don't have to read them all. There's quite a bit of them. You ready? First dividend, 51.9. 55, higher. 57, higher. 79, higher. 55, hold on. Time out. that's over a 22% drop from 79 to 55. 79 to 55 is a 24% drop. Sorry, a 24 cent drop. That's over 30%. That's a big drop. Now, when you're retired and when you're living off the income of your investments, and all of a sudden, one of your payments is 30% less than what you're used to, that's usually a no for me. Usually. But hold on, it actually gets worse. Okay, so the big drop, 79 to 55. 65 higher, 71 higher, 77 higher, 64 lower. Okay? Higher, higher, lower. Higher, higher, lower. Higher, 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 lower. Doesn't make any sense. It's not consistently profitable. So for me, I don't do SPY. Sorry, it just doesn't make sense to me. Okay, and if you're thinking there aren't enough companies that are consistent, well, you are wrong. There's over 300 companies that consistently higher and higher profits. Okay, Kizzy, I don't do Forex. Sorry. Please do NBIS. Run and cook. NBIS. 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 Put it into Yahoo Finance and see how it kind of profits. Oh, running. Sit there on no dividend. Right there, no dividends. So why are we looking at NBIS if it has no dividends? It's a dividend investing channel. It says right in the title, dividend investing for weekly cash flow. All right. Which stock was that? That was NBIS. Did I miss something over here? All right, hold on. Missed some of these questions. AJ, Nick, you later. We already said hi to you guys. Rick, thank you. Josh, no to SPY. Sorry about that. Jared, how are you doing? But you are a hero. Yeah, I can't see it that way. Rick, what's going on? Thank you there, Rick. Which stock was that? Enza, how are you doing? All right. Is anybody here? Enza, of course I'm here. Abelmal. Yeah, I love Abelmal. I do. Unity dropped a lot. It is because of earnings. How you doing, Len? Thank you for that. Len's here all the time. So some people come back over and over and over again. Some of you guys are new here. Let me bust out my chair so I get comfortable, answer some of these questions. Niculator, is Abelmal a dividend king? Yes, it is. 5 decades of consistent profits. Let's keep on keeping on. Niculator, he only does dividend kings. No. Enza, I do dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on old Warren's list. That's 5 lists. Get up. Rick James, what's going on? 10 minutes. Could you give me your opinion on NVIDIA? Hell no, I don't do NVIDIA. NVIDIA is not a, how about no? Seriously, take a look at the numbers for NVIDIA. NVDA. All right, is that Rick James? All right, Rich. $190. $190 per share. Look at what size of dividend you're getting. 1 penny. 1 penny. So you're putting in $190, and at the end of the year, you get 4 cents. Explain to me why you think that's good. Rich, I'm investing for cash flow so that I can pay my bills. NVIDIA is giving 4 cents for $190. Let me do the math for you in case you don't know what that is. Okay, 0.04 divide $190. Okay. That's not right. 4 cents divided by $190 comes to a grand total of, oh, yeah, okay, 0.002. That's not very good. That's not even a half of, that's not even like one, no. No, I don't do NVIDIA. I'm not putting in $190 to pick up 1 penny. No. Sorry. NVIDIA is a no. STLA is a parent company of Chrysler Dodge. Well, alrighty then. I didn't know that. Oh, let's keep on keeping on. All right, Rich AN. It's a Jeep. Got that one. STLA. Got that one. Riley, good evening, good evening. Thoughts on Mosaic? Ooh. Okay, so let's get rid of this. Get rid of that. Get rid of that. Get back to the very beginning so we can start over again and look at Mosaic. M-O-S. I said a M-O-S-T-E-R. A G with a double E. No, I don't do monthlies. February, March, June, September, December, January, June. No. Nope. 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 Who came up with that one? Riley. Come on, Riley. You've been here before. I know it's, you said you know it's a monthly, so why are we looking at it? Rule 4, weekly options only. That's it. I don't do monthlies. The numbers just don't work in my favor. So if the numbers don't work in my favor, why would I do it? That makes no sense to me. Where do you see XRP going? Joseph, bro, I'd love to help you out. I really would, but I know absolutely nothing about it. It doesn't pay dividends, so I don't even look at it. I don't even pay attention to it. Confirm signal available on my Telegram group. Oh, well, now that's interesting. Okay. Okay, running gold. What's happening? STLA only goes back to 2016. Dividend all over the place. Thank you, running gold. Yeah, it's something I normally won't do because the numbers just don't work. Sorry. Jack. OKLO. Now, I've looked at this thing a bunch of times. Not that I'm in it, just that people want me to take a look at it. Okay? OKLO Incorporated. All right, here it is. The high, the low, where was it? Where is it? Look at this. Down, up, down, up, down. Nah, it's dropping. 66.23. The 66 is going for 218. Well, it just tells me it has no dividends. That's what that says. So if you like it, we'll look at the last 30 days. Okay? She dropped, went up, went back down again. So basically, it's not done dropping. Okay, I wait 3 days. Okay, I look for the 30-day bottom, which in this situation was Thursday. Friday's 1 day higher. Monday, 2 days higher. Tuesday, she went down a little bit, and then Wednesday, she's down even more. So I'd wait. If you really like it, just wait. Mo, MBLY. What the hell is that? MBLY. Mobile Eye Global. Never heard of it. MBLY. It's all right. So let's go to Yahoo Finance. Put MBLY there. Why? And let's profitable. Sorry. No. No. It's like we're here. Dividend stock talk. Or if you're on the trader, doesn't say anything dividends, but the subtitle, dividend investing for weekly cash flow. It's just right there in the title. So no. Uh-oh. Odem wants to take a look at Hormel. Not Hormel. It's been around for over 100 years. And it's got 5, count them, 5 decades. That's 50 years of increased profits. So yeah, HRL is right up there on my list. Here we go. But not this week. Check a look at this. Okay. 30 days ago, we're down here. We shoot up. Now it's dropping. However, if you like Hormel, yeah, you guessed it. I'm writing it down for next week. Because I'm assuming, oh, it's already written down for next week. So I suppose we already found it. All right, so it's written down for next week. Here's why. Number one, it's a dividend king. And if you don't know what a dividend king is, it's a company that has increased its profits for more than 5 consecutive decades. That's 50 years. Every single year, higher and higher and higher and higher profits. And it's over 100 years old. You know what that means? That means Hormel has seen a lot of crap. They've seen World War I, World War II, Vietnam, Korea, all that crap that happened over in the Gulf, Desert Storm, all that. We've also seen the market crashes over the last 100 years. Okay, 29, 87, 2000, 2008, 2021, 2024. We've seen them all, and they're still consistently increasing their profits. So I don't have no idea what to tell you about Hormel. You either like it or you don't. Now, I'm not saying you actually have to like the product or what they make, but the company, you cannot argue with the facts. And the facts are the company's over 100 years old. The facts are the company is consistently profitable for more than 5 decades. That means more money every single year. That's exactly what it is you want. But here's why people don't buy it. Because it's not flashy. And it doesn't go from 0 to 100 overnight. Sorry, it's slow, it's boring. Seriously, this is slow and boring. It's 1%. That's it. 1% is not a lot. That's like buying something for $100 and selling it for $101. Yeah, I made a 1% profit. But if you do it every single week, that's over a 50% profit at the end of the year. I can't see. Is this a digital whiteboard or a TV? It's a digital whiteboard. But I could use it as a TV. See, here's the funny thing. I didn't even know, you don't even have a name here. But here's the thing. See, I can hook up my iPhone to this. And I can watch, any movie I want right from my phone right to my my whiteboard. Which means I don't need TV. So we recently bought Starlink, because Starlink allows me to get everything online, and I can get rid of my home phone line, the cable boxes. I can get rid of everything and decrease my online presence bill by at least 50%. So I can save 50% on my online crap just by going with Starlink. Whether you like it or not, it's irrelevant. But it is what it is. Okay. TVRD. I don't even know what that is. Nate, what is that? TVRD. TVRD. Tavardi Therapeutics. Hell no. ORLA. ORLA. Orla Mining. Hell no. Cousin Astra, good evening, and how are you today? All right, so Clash Royal TKO. PayPal does not have dividends, so no to PayPal. What percentage of any of your portfolio is holding negative balance because of the drop in the stock price? Well, you do realize I get 7 different accounts, all right? So I get one account where everything I have is in a negative. Now, that's happened to me twice before. So in the 30 years, this is the 3rd time it's happened where every single thing I own in one account is down. I'm not selling at a loss. I'm still bringing in, even though the stock prices are down, I'm still bringing in cash flow from that account, even though everything is down. All righty. All right, let's go over to here. Oh, yeah, 0.004. I hear you. What are my favorite picks? All right, Rich James. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Old Warren's list. That's my favorite picks. Rock Jersey, can I start with $1,000 and still choose a good stock? Any suggestions? Absolutely, you can. You might need to change your strategy a bit. You might need to go with, hold on. I'll get it in a second. Fractional share investing, dividend capturing. Same thing, kind of. Passport Eric, how are you today? I like the way Intel looked yesterday. I bought and sold the 47 call for Friday. You bought. Okay, wait a minute. You bought the shares, sold the. Okay, I got it. All right. So let's take a look at it. Intel, INTC. INTC. Okay. Here we go. You ready? Intel. The high, the low. Where was it? Where is it? Look at this. Sideways, up, down, up. Okay. It looks rather interesting. Let's take a look at the last 30 days. There it is, last 30 days. 30 days ago was the 30-day bottom. Shoots up. There's the high. Drops back down again. Now she was setting up. Now she's coming back down again. Now, don't get me wrong. I like Intel. I actually have some. But I pace myself. I do get something every single, and I love the premiums on Intel. Look at these premiums. And awesome. So yeah, do you like it? That's a good question. Okay, Passport Eric, you bought the 47s. Okay, so you bought the 47s. You sold the 47s. Okay, that's nice. Looks like a nice trade for you. Nice going there, brother. How can you continue to sell calls on a stock price that dropped? Premiums are not good. I'm going to disagree with you. Okay? Here's where I'm going to disagree. You ready? Let's say, hypothetically speaking, let's get rid of this one and let's open up this one. I'm going to open up a little bit more. Okay, we're going to look at 10. Oh, we're going to need to look at more than 10. We're going to look at 14. Okay, we're going to look at 14. All right. User 65365040632339. Why couldn't your parents just name you Ted? I'm going to call you Ted, all right? Now, if the stock drops, why am I selling a covered call against it if the stock goes down? Listen closely. It's always going to go back to the stock that you pick. Take a look at Intel. Okay? If I bought Intel at 54 and then it dropped down to 42, which it did, take a look. 54 and it drops to 42. All right. So we have to take a look at all these. Now, I'm not 100% sure if you understand this or not, Ted, okay? But what you see here, okay? Black, purple, and a distinctive line right there. Those are puts, right here. These are puts. Over here are calls, okay? Down here, these are the strike dates and the strike prices. Now, the strike prices for this particular stock goes in 50-cent increments. 41, 41.50, 42, 42.50, 43, 43.50, so on and so forth. Each strike allows me to sell the stock at a certain price by a certain date. The date we're looking at the moment is 20 February 26. See? 20 February 26. That's next Friday. Now, pay attention to this part right here, okay? Now, the call options. The purple, this is called in the money. ITM in the money. Same thing on the puts. ITM in the money. That's what that means. Okay? Now, this line right here that separates the black from the purple is called ATM. And no, it's not automatic teller machine where you go get some cash, but you kind of could. It means at the money. At the money. Okay? Lastly, the black. OTM. OTM. Out of the money. So when I say I don't care what the stock price is, I don't care if it goes up, I don't care if it goes down. I get two concerns and only two. Concern number one, is the company consistently profitable? Is it? It's either it is or it isn't. How often has it increased its profits that they shares with the investors? That's the dividend. Has the dividend increased year after year after year after year? It either has or it hasn't. There's only about 300 companies. Now, we checked on Monday. There are 10,899. That's a lot of companies. But I'm only looking at 300 of them. Now, the reason I'm only looking at 300 of them, because there's only 300 companies that are consistently profitable for more than 2 decades, a decade or two, whatever. Those are the only ones I want to do. So here's where my point's going. Hold on. If, let's say I buy, because we're looking at Intel. Okay, this is Intel. Okay. Okay, so we're looking at Intel at the moment. So my main concern is, do I like Intel? Are they profitable? Is this someplace I want to put my money? All right, so imagine if you would, I bought Intel. The current price right now is $48.10. That's the current price, $48.10. Now, hypothetically speaking, let's say I buy 1,000 shares. So 1,000 shares comes to 10 contracts. Okay, 1,000 shares is 10 contracts. Do I really care what the price of the stock is? No. My concern would be, am I in the money, at the money, or out of the money? That means if the stock went down, that means I'm out of the money. So I'm concentrating on these down here. Am I in the money? Then I'm concentrating on these numbers up here. All right, so take a look at the money right here. Stock price is 48. Currently, 48. At the money, 48 would be 186. That's 4%. Okay, count it up. Current price, 48 bucks. 1% of 48 bucks is 48 cents. Now, at the money, the 48 is going for 186. You divide 48 into 186 and you come to over 4%. Now, if the stock drops, let's say it drops 50%. So it goes to 24. Okay? So from 48 to 24, that'd be, 8 or 10 strikes out. So instead of selling at the money, Mr. Fred, okay, I want to strike 4 strikes or 5 strikes out of the money. It's a safe trade. It's a safe bet. What am I getting 5 strikes out? Well, at the money, it is 186. 4 strikes out of the money comes to 105. Think about it. 4 strikes out of the money is 105. Okay. Abbott Labs still at 0.01 by this Friday. Okay. Now, is that 0.01 or is that 1%? Okay, sit tight for a second. I'm still educating Mr. Ted over here. So 4 strikes out of the money, because this is where the action is. That's where you get that's where you get the bigger bucks, at the money. 4 strikes out, I'm still getting over 2%. It's 4 strikes out. So if you're concerned that the stock's going down, which they all do, make sure you get a company that has good premiums. Look at these premiums. At the money, 4%. 1 strike out of the money, 3.5. 2 strikes out of the money, about 3. 3 strikes out, a little less than 3. 4 strikes out, a little bit more than 2. I can go all the way down to here, which would be 1, 2, 3, 4, 5, 6, 7. 7 strikes. 7 strikes out of the money, and I'd still make 1%. My concern is not whether the stocks go up and down. My concern is what is the value of the contract that I'm selling. Okay? I can sell in the money, I can sell at the money, or I can sell out of the money. It is my choice. And remember, just because the stock dropped doesn't mean anything. Until you accept selling at a loss, it's not a loss. Because just because the stock drops 50%, if I don't sell, it's not a loss. Okay, it's not a profit. It's not a loss until you agree to take it. Because the stock drops and you sell it at a loss, well, that's a you thing. Okay, think about it. Okay, the house you bought, the house you're living in, let's say hypothetically it's worth $400,000. And then something happens in the economy, and then all of a sudden everything goes to shit. Now your house is only worth $200,000. Well, do they throw you out just because the value went down? No. You still get the right to stay there and own it and do whatever you want with it. You can even rent it out. Okay, Beast, thank you for clarifying that. Thank you. So when you own, you have control to do whatever you want. When you sell a covered call against your position, that locks you in to a certain price. If the stock drops, well, then more than likely the option will expire worthless, and then you pick another one. It's always a choice. How many contracts do I have? Is the company consistently profitable? Does it offer a decent premium? The decent premium is basically what is the option selling for at this moment? And which one do you choose? Do you choose in the money? Do you choose at the money? Or do you choose out of the money? It's a strategy created for a 9-year-old, and you're trying to make it more complicated. It's really not complicated at all. Adults have a tendency to make this more complicated than it needs to be. Alrighty. Thank you, Beast. But if you get called, you lose. No, no, no. If you get called and you lose money, that's your own damn fault. Okay? Think about it. You buy a stock, you sell an option. If you don't look at that option every single day, if you don't set alerts, hey, the stock's getting close to my strike price, let me know. Then you have a choice to roll it forward, buy it back, push it out, do whatever you want. I got simple rules. 1, consistency of profitability. 2, preservation of my capital. That's it. You want to make it more complicated? I can make it more complicated if you wanted to, but I don't like complications because complications only satisfies the ego. Simplicity is very difficult because people want to complicate it. Okay, rule number 1 is simple. Never buy a company unless you want to own it long term. If you don't understand it, if you don't want to own it, don't buy it. It's that simple. Derek, you got a question? The name's Derek. Cool. So to receive the 1%, do you let the stock expire or sell before then? Okay, you're trying to confuse things. Okay, Derek, what happens? If I buy the stock at the current price, it is $48.11. Once I own that stock, it is mine to do it as I please. What I'm looking for is that safe 1%. So if I buy it at 48, I'm going to turn around and sell it at 48. And it just so happens that the 48 is paying 186. And 186 is more than 4% for this particular trade. Now, let's say, hypothetically speaking, the stock goes up. Let's say it goes to 49. Okay, I have a choice. Okay, if the stock goes up to 49, I can let somebody take it and just keep the profit. Because remember, the profit that I'm taking is 186 per share. So if I get 1,000 shares, 186 is $1,800. And I get all my money back. Because remember, I'm buying the stock for 48 and I'm selling it for 48. So if the stock goes up and somebody exercises, I get all my money back and the profit. Okay, so sit tight for a second. What if the stock goes down? So if the stock goes down, let's say it's at 47. That's one strike out of the money. All right, so I'm not going to sell one strike out of the money. I'm going to sell 2 or 3 strikes out of the money. And this 3 strikes out of the money is paying 121. 121 on a $48 stock is still over 2.5%. It's always going to be a numbers game. What did I buy it for? And this is what you got to ask yourself every single day. I'm terribly sorry. The money's not going to come to you just because you wanted to. You actually have to do some work. Like if you get a dog, you got to take it for a walk. You got to feed it. You got to clean up after it. Same thing with a cat or a bird or fish. Anything that you want in life has a price that needs to be paid. And if you want to have a good retirement account, you got 2 choices. Do it yourself or find someone who'll do it for you. So, Derek, I'm always looking at, what am I buying? Is this a company I want to hold on to? Then, what am I selling against it? What rate of return am I collecting? Where does it look like the stock is going? So, once I buy it, I got a bunch of questions I ask myself every single day. Are you ready? What did I buy it for? What did I sell against it? Where's it at now? Where does it look like it's going? And what should I do? Every single day I ask those questions of every single stock that I own. And the reason I do that is because I don't want to have to go back to work. I'm going to be honest with you. I've been working since 1974, 5 decades. I worked 5 decades, 1974, and I retired in 2023. 5 decades. All right. So all the money I've accumulated along the way, I haven't even gotten my Social Security check yet. My first check is supposed to be March. Okay. So always be leery of what you're buying, why you're buying it. Is it a good company? Are they profitable? Is the premium? Am I collecting a decent premium for my investment? My goal is simple. Simple, safe, predictable, 1% per week. Derek, at work currently, this is why I am watching. I am tired of the job. Gotcha, Derek. I'm here every night, 9 till 11. Ask whatever questions you want. I'll see if I can help you out. Okay, so what questions do we have over here? Over here. Over here. What do we got? What do we got over here? Okay. Okay, Jonard wants to take a look at Nike, NKE. Oh, we definitely need to change this because we don't want to see all of them. I only want to see about 8. Go over here and we want to put in Nike, NKE. Here we go. Take a look. The high, the low, where was it? Where is it? Look at this. Up, down, up, down, up, down, up, down. Yeah, not very glamorous right here. Let's zoom in. Okay, where does that look like it's going? There's no direction there whatsoever. 30-day high, 30-day bottom. Look at this. Down, up, down, up, down, up, down. Okay. No thank you to Nike. We'll take a look at it in a couple of weeks, see if it's changed its mind. New Jersey 78. CVX, that's Chevron? Chevron. Hell no. Come on, Jersey. You've been here before. Okay? You've been here for months. You know I don't buy anything at the high of the year. Hell no. Come on, brother. You know better than that. Nestor, how are you today? Jeff, good evening. Denhive Shops. Good evening. Ooh, long Bitcoin. Yeah, no, thank you. I don't do cryptocurrency. Hey, Nicole, what's happening? Faber, how are you today? Uh-oh. TikTok wants to take a look at UPS. UPS. Aaron, SoFi. Hell no. Thank you, Cousin Astra. Okay, so Aaron, the reason I say no to SoFi is they don't have dividends. Okay, this is a dividend investing channel. Weekly cash flow. Dividend investing for weekly cash flow. It's a dividend channel. We're looking at dividend stocks. SoFi doesn't have any dividends, so no thank you. Riley, I retract PBWI at this time. Chart doesn't look good for entry. Thank you, Riley. One less thing for me to worry about. I appreciate it. Nicole, all right. TikTok wants to take a look at UPS. Yeah, no. Okay, TikTok, no, I don't buy at the high of the year, dude. Check it out. What kind of trade can I do on that that's predictable? How's Abbott Labs? Are you looking this Friday or next? Hold on. ABT. Abbott Labs. Ooh, 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 ooh. You like that one? Hold tight. Check this out. The high, the low. Where was it? Where is it? Look at this. Sideways, down, up. Well, the low of the year was a couple of weeks ago. Okay, now we're here in the stock market. You cannot get any better than the low of the year. You've heard it. You want to make money in the stock market? Buy low, sell high. Well, the low of the year was a couple of weeks ago. Let's zoom in and take a look. Okay, here's your 30 days. 30 days ago, we're at the 30-day high. We dropped, gap down. Now it's slowly recovering. Okay, now gap downs like this right here have a tendency to fill. So this baby's going to go back up to at least 122 if you like it. Okay, remember, don't buy something you don't like. Uh-oh, Faber, you're not that old. Yeah, I am. I'm 62, brother. My body just doesn't want to do what I want it to do anymore. I'll play soccer for an hour. It'll take me 3 days to recover. Okay, when I was younger, I could play 2 or 3, 4 games in a day. I would get up in the morning and play one game, then play another game, play another game, play. Now, I'm talking an hour and a half of running around on the soccer field. When I was younger, yeah, I could do four games in a day. Nowadays, one game, it takes me 3 days to recover. Okay. You get older, brother, it's just not as much fun. Golden years really aren't that golden. For me, anyway. Because I'm not ready to sit on the couch and just, rock my life away. Which I could do if I wanted to. I mean, I'm in a very comfortable position where I don't have to do anything for the rest of my life. Providing that my health stays good. All right. Let's keep the ball rolling. Abbott Labs, 113.59. Well, let's take a look at the 113s for next week. All right, we're going to change it to covered call. That's where we buy the stock, sell the option. Remember, it's a simple strategy. The easiest strategy is just buying the stock. But there's a problem with just buying the stock. There's no profit there. You actually have to wait for the stock to go up before you can get your profit. And who knows how long that can be. So, so I cheat just a little bit. I use what's called a covered call, where I buy the stock, sell the option. My profit is guaranteed and it's locked in. Locked in, which means I know what my profit's going to be before I even do the trade. But some people have a problem with that. Because if I buy a stock and it goes up, they say, oh, but I missed all that. Yeah, fine. Share the profits. Don't be greedy. 1% a week is over 50% per year. Keep focused on what you want to do. If you want to make, 200 or 300% a year or 200 or 300% per month, this ain't it. This is slow. This is boring. This is only going for 1%. Dave is an epic man. Oh, my, my, my. All right. hold on. Beast wants to take a look at Abbott Labs. Let me finish up with Abbott Labs. Okay. 114, the 114, there it is right there. One contract. Let's do this. Abbott Labs. Here we go. Abbott Labs. Buy one covered call Abbott Labs, the 114 call option. The stock price is at 114. So think about this. Let this sink in for a second. At this moment in time, Abbott Labs is 114. If I buy it at 114 and I sell it at 114, where's my profit? There's no profit in the stock whatsoever. I'm buying at 114. I'm selling it at 114. So where's my profit? My profit is in the option contract that I sell. Listen closely. Okay? If I'm selling the 114 and I'm buying it at 114, my profit is going to be 171. That's the option contract. I buy it at 114. I sell somebody the rights to buy it from me at 114. So I don't lose any money on the stock whatsoever. Because if the stock drops, well, I already got the money. If the stock goes up, I already got the money. Okay? So my concern, back again, is the company profitable? Does it have weekly options? That's it, just two. Consistency of profitability and weekly options. That allows me to get 1% or more every single week. All right, so calculator, the profit 171 on Abbott Labs, the investment 11,000, was that 229 for a grand total of 1.5% for 1 week. Remember that. You're changing the way you're looking at things. Okay, I'm not investing for annual returns. I'm investing for weekly returns. So yeah, the companies that I buy have to have weekly options because that's what I'm looking for. Okay, so 1.5, let's save this one. Come out, wherever you are. There it is. And there it is. One covered call, Abbott Labs, the 114 call option, 20 February. That's next Friday. Not this Friday, next Friday. 171 is the profit, 11,000 is the investment for a 1.5% return for 1 week. You got to change your line of thinking. If you're going to be doing this, you got to change your line of thinking. We're not investing annually. We're investing weekly, Monday through Friday, Monday through Friday, Monday through Friday. Guess what? Whether you like it or not, whether you agree or not, Friday's coming. It's 3 days away. Even this Friday, Abbott Labs at 1%. Thank you, Beast. All right, so let's save this one, 1.5. 1.5. Yay, that's 3. We need a couple more. Couple more for the day's over. What do we got? What do we got? What do we got? Oh, Tulip Man. Pfizer. PFE. All right, hold on. Got to get rid of these. Pfizer. PFE. Hell no. Wasn't that quick? Nope. Now, anytime you look at a chart, practice. It should take you 3 to 4 seconds. That's it. 3 to 4 seconds. You're looking for 5 things. 5. You ready? Here we go. High, low, where was it? Where is it? And what's the motion of the ocean? What's the trail through the woods? What's the bend around? Whatever you want to call it. Up, down, up, down, up. Okay? It's at the high of the year. No, thank you. I don't buy anything at the high year. 3 to 4 seconds. That's all. High, low, where was it? Where is it? Where's it going? 3 to 4 seconds. PPC. Jaws. What's going for PPC? Is that right? PPC. Isn't that People Computers? No, Pilgrim Pride. What? No. Okay, Jaws, I don't do monthlies. They just don't work in my favor. Too much work, not enough rate of return. Dave is an epic man. Dave, the safest index fund during retirement. I don't know. Why don't you tell me? I don't do index funds. Sorry. Elves, Microsoft, MSFT. Interesting. I'm not 100% happy with it, only because, take a look right here. Okay, 30 days ago, we're at 490. And then we dropped down to 190. We went up, now we went back down again. Not quite ready to jump in. TikTok, I can. I'm not quite sure what that means. Weekly TQQQ. Okay, yeah, we've already talked about the Qs. I don't do the Qs because they're not consistently profitable. See, I don't. Watch the QQ. Then you tell people or not. So I'm going to say no to this right off the top. Here's QQ 2014, 2015, no 16, no 17, no 20, no 21. Okay, the very first dividend was 0.0002. 0.0002 means you'd have to have at least 1,000 shares. Wait a minute. 100, 1,000, 10,000, 100,000, a million. You got to have 1 million shares to get anything decent out of the Qs. So look at the dividend. 0.00025. And that was 2014. Okay? Now, look at where we are now. Okay, 2023, 6.4, 6.9, 11, 10, that's lower. 14, 11, that's lower. 13, 9, that's lower. 10, 5, that's lower. A 50% drop. Who came up with this one? Jay. Jay, do you see this right here? June 2025, 10.9. 10.9 in June. September, 50% drop. How can you possibly say a 50% drop in profits is a good thing? TikTok, it's right there. Okay, 10.9 and it went down to 4.9. 10.9, 4.9. It's a 50% drop. Hell no. And I don't even know why you won't even look at that. All right, next. Next. Okay, Jay says TQQ is the greatest of all time. No, I don't think it is. You definitely need to take a look at the numbers, brother. Really. All right. Let's find out what we're doing because we're running out of time. Okay, Target, TGT. TGT. You missed out on this opportunity. Who came up with that one? Beast? Check it out. Okay, we bottomed out 30 days ago. We shot up. New bottom here. Shot up. Now it's dropping. So Target, maybe 2 weeks from now. Not this week. So let's write Target down for 2 weeks from today. Because Target, after all, is a dividend king. Ooh, that list is growing for 2 weeks from today. I wonder how many people are actually writing these down. All right, let's keep on going. OXY, Occidental Petroleum. OXY. No. Who came up with that one? Come on, Beast. You should know better. It's at the high of the 30-day period. Look at it. Look at the growth. From there all the way up to there. Yeah, no. Okay, what do we have here? Weekly, no. No. Oscar's house is here. Thank you, Oscar. Paul, wouldn't Amal but not save? Has earnings tomorrow. No. See, Paul, I don't pay attention to the earnings. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. So no, I don't pay attention to the earnings. Now, there are some companies I stay away from during earnings. Target is one of them. They're notorious for black swans. If you don't know what a black swan is, look it up. It's not a happy thing. All right, let's keep on keeping on. She-Wolf, how you doing? Trey, ooh, Kevin. Kevin wants to take a look at Kohl's. I love Kohl's. I do. It's one of those profitable companies we trade over and over and over and over again. Walgreens used to be awesome. Walgreens was awesome. U.S. Steel was awesome, but they went private, so we lost their opportunities there. All right, so Kohl's. You got your high at 25.35. That was the beginning of December. We bottomed out in April, 578. Okay, now we're sitting at 1878. Okay, we're bouncing off of a bottom right there. Okay, nice. So we'd be looking at the 19s, and the 19s are going for 48 cents, which 19 on 48, that's more than 2%. So let's take a gander. Let's take a gander at Kohl's at 19. There we go, right there. Just one contract, and there you go. Here we go, and get my butt up, and let's take a look. Are we ready? Buy one covered call, Kohl's, 20 February, that's next Friday. The $19 call option, the stock at this moment in time is $18.80. That's after hours numbers, $18.80. So what do we got, 20 cents before you hit 19? All right, sit tight. Profit, 81 bucks. The investment, 1,800. Okay, let's check out that rate of return. Okay, my profit, 81 bucks. The investment, because remember, anytime you're going to get a rate of return or some kind of return on your money, you have to put something in. Okay, no one's going to allow you to, trade without any money going in there. All right, so 81 is the profit. For one contract, it's 1,819, and that comes up with a rate of return for 1 week, 4.4%. Kevin, 4.4% for Kohl's. If and only if you like Kohl's, 4.4%. Let's take a gander. All right, let's save this one, 4.4%. Why not? Yeah, I believe this will be number 5 for the day. Is it? No, it's only number 4 for the day. Damn it, we need one more. One more. Come on. Calls. 20 February, next Friday, the 19 call option. 81's the profit, 118. 1,800 is the investment. 4.4%. Either you like it or you do not. Uh-oh, I went too far back. Damn it. I went too far to the dark side. Still 4.4. Got to save it here for you guys. Come on, there it is. 4.4. Gotta love it. 4.4. Why not? Uh-oh, Colby, Archer. Beast wants to take a look at MA is, wait, don't tell me. MasterCard. MA, MasterCard. All right. Colby, Archer, ACHR. Let me get back to the beginning where everything's wonderful. Archer, ACHR. Not this week. Who came up with Archer? Colby. Before I even go on, take a look. All right. High, low, where was it? Where is it? Look, it's down, up, down, up, down, up, down, up, down. Okay, going down at the moment. Zoom in. All right, there you go. 30-day high, 30-day bottom. She shot up. Now she's coming back down again. Not this week. Keep waiting for that bottom to show up. Will Justice. Okay, Coca-Cola. Okay, KO. No. Uh-oh, visibility restricted. Appeal. They appeal every single day. And they keep restricting me every single day. One. See, the funny thing is, okay, I have 2 live TikToks. One right next to it. See, 2 cameras right next to each other. One going to the 10-minute trader and one going to Dividend Stock Talk. The exact same content, the exact same channels. Okay? TikTok. Okay, 1 channel, 2 channels. They're both right next to each other. It's the exact same content. So why is one being flagged and the other one not? What does that tell you? Seriously, if you say something and they're picking it apart, well, great, you're probably saying something wrong. But if you say something and it's recorded from 3 different directions, it means there's 3 different ways of looking at it and only one of them is being censored. What does that tell you? Think about it. I have 8 cameras. 1, 2, 3. Well, that one's off now. So 1, 2, 3, 4, 5, 6. And then I get 7 down here. That one's off and that one's off. So all the content is the exact same because all the cameras are on at this moment. So why is only one channel being censored? Almost every other day. Your information is being censored. You're saying or doing something that's not approved. If it's not improved in one account, why is it okay in the other 8? That makes no sense to me whatsoever. Okay, Coca-Cola, last 30 days. What do you think? Think about it. Bottom right here, 70. Shoots up to 79. That's over 11%. It's 11% increase, 30 days. Pulled back, now she's going back up again. 78.60, the 79s are going for 69 cents. I've been trading for about 30 years. 30. 30 years. 30. I must have bought Coca-Cola over that 30-year period twice. In 30 years. You know why? Hardly ever does Coca-Cola pay 1%. The stock price, 78.60. 1% of that would be 79 cents per share. They're only offering 69. Yeah, no, thank you. Sorry, I just don't do it because the numbers aren't good. All right, Beast, M-A. MasterCard. No, we're saying no to MasterCard, Beast. Here's why. You ready? 30 days ago, here's the top. Bottomed out, retraced. Now we're going down again. 537. 537. It's paying a nice premium, but it's dropping. I don't buy anything while it's going down. I wait for it to stop and bounce off the bottom like this. See? Here's the bottom, and it bouncing up. That's where I would have jumped in. 1, 2, 3, right there. Then I would have done that little run right there. That's what I would have grabbed onto. Remember, I'm only looking for 1%. It's not that difficult to get. Captain Caveman. Ooh, I remember that show from the 1970s. Captain Caveman. Hey, I remember that. What is your favorite stock under $60 per share for weekly options? Macy's, Kohl's, Macy's and Kohl's are my 2 top at this moment. Boy, that's the biggest scam ever. Hey, Greg Apple, how are you doing today? See, Greg, I'm kind of concerned, but what you're calling a scam. I'm not selling anything. I'm just giving away information. What's the scam? I'm kind of curious. All right. Are you ever in a pinch and settle for less than 1%? All the time. Beast, every day. Every day without fail. What did I buy? What did I sell? Where is it at now? Where does it look like it's going? What should I do next? Remember, you've been here long enough, you know I'm interested in 2 things and only 2 things. Consistency of profitability and preservation of my capital. All right, so Greg Apple. I'm a little curious as to what do you think the scam is here. I'm not selling anything. I'm just giving away information. Okay. Let's see if he replies to that. I doubt it. I doubt it. All right. Does it bother you? No, it doesn't. Oh, okay. Deals for days. Whoa, King Kong trader. That's why you're broke. Oh, come on, be nice. We have no idea what Greg Apple is actually doing. Why he said that, I have no idea. Cause an Astro, let's be nice. We have no idea what Mr. Greg Apple, why he feels that way. Maybe he has a good reason. I don't know. I've never heard of him. I've never seen him before. Greg Apple, I would remember that name. I'm pretty good with names. Cause, I've seen you coming here all the time. Mac Masher, you're new here. William Decker, I don't know if that sounds familiar or not. But Deals for Day, he's been here before. Dylan Rupplinger, is there a go list to find these weekly paying dividend stocks, or are these all search and find? Nope. Dylan, are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on old Warren's list. Those 5 lists right there should give you 300 companies that are consistently profitable. Okay? Running Gold. I've been here for weeks and I haven't seen any scams. Thank you there, Running Gold. I appreciate that. And no, I don't try to sell anyone anything. I'm just sharing information. We're all adults. We know how it works. You like something, you want to buy something, fine. Go to the website and buy something. It's up to you. The information is basically free. You just got to look and find it. Now, I've already found it because I found it, over the 30-year period that I've been investing. And yeah, I do sell it. I don't give it away for free because here's the thing. People who pay attention. If I gave it to you, you wouldn't have given it any value because you have nothing to lose. And if you have nothing to lose, you've got nothing to gain. So it's pointless for me to give you anything. I mean, I give you 2 hours of my time every single night, but I'm not giving it to you. I'm creating a video log for my children and my grandchildren so that when I'm gone, my grandchildren will at least know what their grandfather did. I know nothing about my grandfather. I know nothing about my great-grandparents. Nothing at all. How do you go on... Wait a minute. How do you go on your morning call? VJ, you actually got to sign up for that, and that is a paid service, and I'm not going to try to sell anything. Okay? If you're interested, drop me your number, and I will call you personally. Okay? And I won't try to sell you anything. Okay? We're all adults. We know how the world works. Mac Master, what should I invest in? Right at the top of my list, education. How do you like that? What kind of scam is that? I mean, do I have stuff to sell? Yeah. Am I going to sell them anything? No, I'm not going to sell them anything. You should invest in yourself. Education. Ask yourself, what are you looking for? Okay, there's only 3 rules to success. Work hard, live right, and find something you believe in. That's it. It's really not that difficult. Let's keep on going. Ben. Okay, got that one. Let's look at Schwab. Isn't that SCHW? SCHW. Okay, interesting. Who came up with this one? Roger. Roger came up with Schwab. Now, here's an issue with Schwab. Are you ready? The high of the year was yesterday. And it had a big drop yesterday and a big drop today. So what does that mean? Well, that means after a big drop, there's going to be a retracement. But you got to wait for the bottom to show up. Look at the last 30 days. Okay, here we go. Last 30 days. 30 days ago, we're at 102. We shoot on up to 107, and now we drop down to 95. Ask yourself a question. Is 95 the bottom? Well, we don't know. We don't know what's going to happen tomorrow. Hold on. VJ, thank you. I will soon try to go on the morning call. Okay. Beast, what's the 4 you have down so far? I can see what charting looks like. And I don't repeat. Thank you, Beast. Give me a couple of seconds. Let me finish up. Beast, I'm looking to find one more. I want to do 5 every day. So far, we got 4. Let me find one more. Okay, battery is low. All right, whatever. Okay, so Schwab's going to be a no. Wait to find the bottom. It may be tomorrow, maybe the next day. But you have to decide where you want to jump in. Now, I jump in after the 30-day bottom and then 2 days to the upside. The third day is my decision day. Do I jump in on the third day up or do I not? You got to figure out what works for you. All right, let's keep on going. We got only like 10 minutes left. USA! All right, who said that one? The Money Mass. I see the mirror video. Yeah, I see that too. First time here, do you offer private training services? Yes, I do. Before I go on, something he just mentioned, do I do private one-on-one? Yeah, I do. But here's the thing. You probably, some of you are replying to an email, a text, a WhatsApp, a Snapchat, a Telegram from me. Sorry, that ain't me. I don't do that. I don't Telegram, I don't Instagram, I don't send direct messages to anybody. If you want to have a conversation, drop me your phone number or go to the website, book a call, and we'll have a conversation. And I promise you, I will not try to sell you anything. We're adults, we know how it works. Yeah, I have something to sell, but I'm not going to try to sell you anything. You got to try to sell me that you want to buy something from me if you want to. If you just want to ask questions, fine, just ask questions. I'm trying to give back to the community in which I got so much from and I still get some from. So I'm just trying to give back. So I'm not trying to get rich off of this. I don't need your money. I just need you to commit to yourself. That's it. Okay. Judah, beautifully inspired. Thank you. SEH. Which AI company do you believe is the best upside? Don't know, don't care. Okay. SEH. I don't do that because they're new. They don't have 2 decades of historical performance. Until they do, no thank you. TikTok, I bet you don't love big drops of your own stock. No, I don't love them, but I deal with them. I'll give you a perfect example. I have a couple of stocks that have dropped 50% from when I bought it at. Okay, I bought it, now it's dropped 50%. Am I panicking? No. Why? Because that stock still increases its dividend every single year. That stock still gives me something every single week. It might not be a 1%, but something is better than nothing. Now, before you came here and you learned that you can make money every single week, most people are happy just collecting a dividend every 90 days. So yeah, it depends on how you look at it. Do I mind if the stock goes down? No, not really. Would I prefer that it didn't? Well, of course I would. But it doesn't work that way. Stocks go up, stocks go down. That's it. They go up, they go down. There's a 100% chance that you buy something, it's going to drop eventually. Think about it. There's also a 100% chance that when you buy something, it will go up eventually. Because that's all they do. They go up and they go down. They don't come to your house and cook you dinner. They don't take the dog for a walk. They don't mow the lawn. Stocks go up, stocks go down. That's it. That's all. End of story. Which AI company? I don't even do AI companies. They haven't been around long enough. Okay, thank you, Robert. Okay, Stellantis owns Ram trucks. Don't really care because they keep going down. Jonathan, no options on GLDY. Thank you, Jonathan. How's your dad doing, brother? Everything good down there in Miami? Hope so. All right, get up there. Here we go. Mohammed, I know you covered United Software. Can you cover it again? It dropped today. Yeah, we already did that. You did buy it at 28. Well, great. You bought it at 28. Sell the 28s. What are the 28s going for? Oh, wow. Wait a minute. You bought it 28, and now it's at 21. Okay. So why not sell the 23s? Think about it. Okay. Okay. You jumped in at 28, which is right here. It's now down at 20. Let me zoom in a little bit closer. Okay. You jumped in at 28. It's now at 21. What's wrong with the 23, 24, 25, 26? Okay. The 23 is going for 59. That's more than 1%. Hold on. Let's take a look at some more. Okay. Okay. The 24 is going for 37. The 24 is way up here. The 24.50 is going for 20. Not quite 1%, but still there. Think about it. You go 4 strikes out. Okay, 1, 2, 3, 4, and get 59. You go 5 strikes out. 1, 2, 3, 4, 5, and get 38. 38 is still more. 30 is 2% of your entry. You jumped in at 18. I'm sorry, 28. Yeah, you jumped in at 28. And the 23.50 is going for 38. That's 1.5%. The numbers are there. You just got to play with it. Now, don't roll it. See, if you do, if it was me, okay, it's at 21. I jumped in at 28. I'd be doing the 24s and picking up 37. That's 1%. That's 5 strikes out, still 1%. So as the stocks go up, I also move my strike price up. Only do it for 1 week, Monday through Friday. Does it hit your target? So we're on Wednesday. Okay. So not this week. What is this week going for? Okay. So this week's 25s are going for 8 cents, 24.50, which is right there, going for 8 cents a share, which is a little over 0.5%. That's 26% at the end of the year. 0.5%. 26% at the end of the year. Okay, great. The 24s this week. Next week, I might do the 25s or the 26s. It depends on how the stock moves. That's why I look at it every single day. What did I buy? Where's it at? Where's it going? What should I do? Richard, Scannion, what's happening, brother? Yes, but if it's called at 23.50, you bought at 28, isn't that a loss? Hold on. It's a contrary of wait a minute. Let me hold tight for a second. No, I don't want to do that one. That one works. Oh, am I going to be able to do this? I might be able to do this. Oh, wait a second. Yeah, I can check this out. No, hymns. There we go. That's not what I wanted to see. Canceled orders. Nope, that's not what I want to see. Damn it. Shit. I'm trying to figure out the easiest way to show this to you. And I need a sample to go on. And I don't have one in front of me. Okay, this is going to work. You ready? Check this out. All right, give me a second. I'm going to blow this up so you can see it. Okay, this should answer your question. All right. Come on. That it right there? There it is. All right. All right. Now, somebody asked me, what do you do when the stock drops? Okay, check this out. Are you ready? HIMS, I originally bought at $52 per share. What's it at now? Well, right now, it's at $35 per share. So it's down quite a bit, right? Hold on. Now, this week, I sold the $26 call option. Okay? However, the stock is currently at this moment in time. Let's get rid of this. HIMS, right? We're on HIMS. Yep, HIMS. Give me a second. HIMS. Here we go. Okay, so HIMS at this moment is at $16.69. Okay, I sold the 26 calls. I'm originally in at 52. My current price, my cost, wait, hold on. My dollar cost average is at 38. However, I sold this week's 26s. So somebody could buy it from me at 26, but here's the thing. They would be losing money because they're going to pay me 26. What did they pay for that privilege? For that privilege, they paid 28 cents per share. That means the break even is 26.28. That's the break even. Ain't nobody going to buy it from me now because the stock is currently at, hold on a second. Hold on. I can't do that. It's currently at 1669. Okay, the stock is currently at 1669. Okay, so I'm in, where is it? Hims. Okay, I'm in at 52, dollar cost average of 38. I sold the 26s. The stock is at 16. Ain't no way someone's going to buy this from me. And if they were going to, they have what's called the break-even price. The break-even at 26 is 26.28. That's just to break even. Nobody buys a stock just to break even. Doesn't make any sense. So you buy the stock and you sell the option. Now the stock has to go up, not just to the strike price, but to the strike price and the premium, just to break even. Okay, so hypothetically next week, the stock is at 16 bucks. So I will drop the strike price down to maybe 19 or 20. Okay, this week I sold the 26s. Next week, I'll probably sell the 19s or the 20s. Okay, what is the 19 and the 20 going for? Okay, the 19 for next week is going for 27. Okay, remember, I'm not in at 27, but I can sell the 19s at 27. My cost is 35. But next week, I'll be selling the 19s. Yeah, I'm only getting 27 cents per share, and that's only 0.75%. It's not a full 1%, it's not a 0.5%, but it's 0.75% for 1 week. Now, I will continue doing 0.75%, and I will continue moving it up one strike every single week until I'm back up to my $38 price. And who knows how long that's going to take, but what I'm looking for is the consistency of profitability. Yes, but if it gets called at $23.50 and you bought it at 28, isn't that a loss even after the premium? Okay, Richard, I hear what you're saying, and you're right in theory, because in theory you're correct. And if it does get called away, that's my fault. But never would it happen. I look at my stocks every single day. And if I'm concerned, I will set an alert. Alerts are easy to set. Watch this. Okay, right click, create alert right there. Pops up. All I do is right there, I fill in the stock price, whatever price I want to be alerted at, and it gets sent to my email, it gets sent to my portfolio, and it gets sent to my telephone. So if I lose, it's my own damn fault. Okay, I look every single day. What did I buy for? I bought it at 38. What did I sell? I sold the 26s. What did I receive? 28. What's my break even? 26.28. What's it at now? 16. No risk there whatsoever. I look every single day. It's your money. If you don't look at it every day and it gets called away and you lose, that's your own damn fault. Okay, what if you don't feed your kids? That's a big problem. What if you don't feed your dog? What if you don't feed your cat? What if you don't take care of things? Okay, people spend more time on their weekend barbecue than they do with their money. It's your money. Figure it out. Don't let it get called away. If it gets called away, it's your own damn fault. Think about it. You should know exactly what did you buy, what did you sell, where's it at now, what does it look like. Set an alert. That's what it's there for. It's free. Okay, right now I'm at 38. Well, the stock's at 16. Fine, I'll set an alert for 20. Low battery. All right, let's see how many more questions we can get. We're past 11 o'clock. No more stocks. Let's just take a look at what we have. All right. Will, Kev, what's happening? Kids never learn. What does your portfolio look like? Okay, thank you for that one. MU, Micron. I like Micron. All right, alerts, great idea. Well, you should have that. All right, Dr. Corey, dude, tomorrow. Okay, we're past 11 tomorrow. ASX tomorrow. Luis or dividend stocks, absolutely. Kevo, what's happening? Have you ever rolled a profitable call? All the time. All the time. Thoughts on security and protection sector. Big push for more secure public events. Okay. More of a statement than a question, but all right. Low battery, thank you. Okay, Steve, ASX tomorrow. Wavelengths tomorrow. Steve, tomorrow. Rondo the lineman. I am a lineman for the county, and I ride the... Okay, what's a good dividend for starters? Dividend kings, dividend aristocrats, dividend champions, so on and so forth. Steve X, ASX tomorrow. John, MAS tomorrow. ASX tomorrow. Tomorrow is a monthly. Thank you, Ken Ray. Kevin, Coles, and TSLY. Yeah, tomorrow. Beast, you are looking for February 13th or the 20th expiration. It depends. Okay, the 13th is only 3 days away. Very rarely will you get a good fill with 3 days. So we look next week. Paul Goodwood, good run. Got to run. Good. Thanks. Learning every day. Appreciate you. Hey, 110 Beast. I can't wait to see what my Christmas card looks like. Bought Intel at 47, the 47 strike to be safe side. MA 115 premium. Woo! Nice, Eric. Nice to go. Click to trade. Not realized. Okay, thank you. Good night. Thanks again. You're welcome. Niculator. If the stock goes way up, then should you roll it or let it expire? I'll just let it go. It's always... Okay, Niculator. It's always going to be a numbers game. What did you buy? What you sell? Where it's at? Blah, blah, blah. That kind of stuff. Rondo the lineman. Pepsi tomorrow. Carnival Cruise Line tomorrow. Dollar Tree tomorrow. John. Hello, hello. Cincinnatus. Nice to see you. Aaron, Multisports. Hims is on a lawsuit. Yep, it is. Yep, I got that. Now, my Hims is down over 50%. I didn't sell it, and I'm still bringing in money from it every week. Dr. Corey, James is not scamming, and since I found him 6 weeks ago, I've met him for dinner, and he has entered me money. I have no idea what INTR. Okay. Farmer Dan sold T calls at 27. Stock is at 28. Do I let it sell Friday at 27? I paid 21. Okay, so Farmer Dan, I cannot tell you what to do. I can tell you a few things and you decide for yourself. Number one, it's not a profit until you take it. Number two, nobody ever went broke taking profits. Number three, don't be surprised if the profits that you see get taken away from the market maker. Because stocks go up and then they come back down again. Okay? You got to decide what makes sense to you. You bought it at 21. You sold the 27s. Okay, there's a profit there. Take it, don't take it. That's a choice you got to make. Then, when the stock comes back down again, jump back in again. Hopefully that makes sense. Oscar's house, thank you. All right. Momo. I'm just going to hedge on gold. You have fun with that. Farmer Dan, you're welcome. FMC tomorrow. When do you average down when a stock goes down? All right. Hisoka. All right. It's always going to be dependent on my positions. How many positions do I have? How many available cash do I have? And does it make sense? They're all simple questions, but it's a good one though. Do you sell calls under your cost basis? Sometimes I do. Castro, how are you doing? How many trades can I put at a go? As many as you can handle. Okay. Sal, healthcare has been doing well so far this year compared to tech. Do you think healthcare sector will have a correction as well as in the next couple of weeks? Don't know. Christopher perfected his American accent. All right, Duncan, thank you for that. Kovo, what's a black swan? A black swan is where there's a above average move to the upside or the downside out of the blue. It's like a black swan. It's like, how often do you see black swans? Very rarely. Okay, they're not, that prevalent. Beast, thank you. Appreciate it. All right, thank you. So it doesn't happen that often, but it's a surprise. Okay, I remember I had Target a few years ago, and it had a black swan. It jumped up $26 overnight. So it closed one day, very next day it gapped up $26. That is a black swan. And it goes the other way too. It can be at 100 and drop down to 50 overnight. They call it gap down. Black swan. When it's really big, it's called a black swan. Running gold, that was very interesting. Can you run us through that call drop again tomorrow? Yeah, you're going to have to remind me tomorrow exactly what we're talking about. What else do we have? Take a look at Microsoft. Microsoft, yes. Meta, no. And QQQ, oh, hell no. Meta only has 3 years of dividends. That's it, 3 years. I want 2 decades. That's 20 years. So Meta, not for another 17 years. The Qs ain't no way in hell. Okay, they're not consistently profitable. They're up, they're down, they're up, they're down, they're up, they're down. No, thank you. I personally would prefer companies that are consistently profitable year after year after year after year. I always thought a black swan was a world event that affects entire economy, not just U.S. A black swan is one of those things that you see once in a blue moon. Like, not that often. It's like, think about it. When's the last time you went to a lake and you saw a swan? They're usually white. When's the last time you went to a lake and saw a black swan? Hardly ever. They don't happen that often. But when they do, it's like, holy cow. Same thing. Big drop or big jump. Meta should be an exception. You need to explain that one to me. Okay? The boy has only been paying dividends for 3 years. So it can happen to an individual. Yes, it can. Okay, Kevo. Explain to me in a manner in which I will understand why you think Meta should be an exception. Okay, 3 years of dividends. Never. Well, Kevo, you can't say it twice. You can't say Meta should be an exception, and then you can say never. Mind, it's too expensive. Yeah. Okay. All right. What else do we have? Just discovered you, Jonathan. How are you? Are you referring to options only? Jonathan, what I'm doing here is I buy good quality dividend stocks and I sell covered calls against them for a simple, safe, predictable, consistent 1% per week. Yeah, I know it's 50% per year. A lot of people can't comprehend 50% per year, but you actually got to do the work. You actually got to look every day. What did I buy? What did I sell? Where's it at? Where's it going? What should I do? That should take you less than 10 minutes. There's a reason it's called the 10-minute trading strategy. It's simple. It's easy. It was even created for a 9-year-old little girl. In 2008, my 9-year-old girl said, Daddy, what are you doing? Can you teach me? Well, yeah, I can teach you. Simple, safe, predictable, consistent, no way to lose. That's what it was. Okay. Naughton Coy. Hello, all. Just call me Fred. What do you think about Ford? Love it. Cash secured puts? Love it. Covered calls, love them. You have 7 accounts. Are any less than 2-decade requirement high risk? Nope. Okay, Beast, look at it this way. Sorry, I shouldn't say how many you have, but all right, not the point. Okay, Beast, the way I look at things is, number one, I'm a Gen Xer, so we grew up believing if it ain't broke, don't fix it. 2, if it works fine, leave it alone. Okay, we're 20 past 8. Let me finish some of these questions. Black Swan saying is like something very bad happened unexpectedly. Yeah, it's exactly what it is. Black Swan events. Best speculative stock right now? Don't know. I don't do speculations. I do predictability. Predictability, consistency, and profitability. Hi, do you have tried any overseas stocks? No, I don't know anything about the overseas market, so I only stick to what I know. Sorry. Death Spawn. What are good dividend stocks that you like? Not financial, just your thoughts. Good for beginners. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Old Wally's list. Death Spawn, thank you. Same Shake. Hello. Well, good evening to you from India. Nice seeing you. Yes, sir, I feel you. Thank you. Appreciate you helping many for free. You're welcome. DTC Queen. Oh, she came and left real quick, didn't she? Guess she didn't want to hear what I had to say. Okay. Peter, I've been listening to you for about 5 months now and started paper trading and doing well. Peter, get double, brother. There you go. You got a double. Nice going. I sold a call spread on HIMS. Okay. Been selling call credit spreads on HIMS. Okay. Can you give us an analysis of Q? Yeah, my analysis of Q is hell no. That's my analysis. I sold 17-18 spread on the calls. Well, alrighty then. This week, got it. Okay, risk versus reward, absolutely. Roll that. Yep, I'm going to agree with you. You buy the call back sometimes and sell it later, expiration for the same amount. Absolutely, as long as the numbers work. If it reaches your alert, do you buy or roll? Okay, Peter, here's the thing. Okay? Pete, I'm always looking at what did I buy? What did I sell? Where's it at now? Where is it going? What should I do? Okay, we cannot answer the questions of Friday afternoon with the information we possess today. But I do look every day just to see how are things progressing. Amir, the option, if you hold it, it expires, you lose money on it. Depends. Are you in the money, at the money, or out of the money? You can't just say if the option expires, because they all expire at some point. I racked in like 80 on him call credit spreads today. Cool. Credit spread. Yeah, I got it. I like credit spreads. Cause stocks to trade sideways. Sometimes they do. Credits could capitalize on theta decay. Absolutely. I love credit spreads. Sell credit spreads out of the money for like 80% chance of winning low collateral. Absolutely. I agree with you. Sentiment on CRM. Hell no. What platform are you trading on? I trade on Think or Swim, which is through Charles Schwab, and Robinhood. All right, I'm going to call it a day. There's too many questions for me to finish up. You guys have a great night. We'll do this all over again tomorrow. Yep, the wheel strategy is pretty good. I try not to do it, though. For a call or learn more about what you do sell. Okay. Alrighty. Mind, it's too expensive. Thank you. Oscar, thanks. Have a good night. All right. So you guys have a great night. We'll do this all over again tomorrow. Have a great night, everyone. I'm out of here. And now the end is near. And so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain